U.S. economist at Santander, and he joins me now. A lot of people have PTSD of what happened in 2011, and many people are saying, look, this is a bit like deja vu. Are we going to even have enough time without the sort of scuffles that we're seeing already playing out to be able to meet that June 1st deadline? What is your outlook right now on the probabilities that we could face in the next few weeks?
Yeah, I think the chances of the U.S. actually defaulting on its debt are very low. It's going to probably go down to the last minute and close, but it seems to me that neither side really is eager to see a default. So they obviously have tough negotiations ahead, but I think in the end, if we're coming to the deadline and they're still at an impasse, my guess is that they'll find a way to extend the time limit and give themselves more time to talk.
Yeah, I mean, what do you make of the fact that President Biden says, look, we need to raise the debt ceiling without conditions attached? Republicans are saying we need to look at spending cuts. There seems to be a big divergence in terms of what, people are thinking on either side of the aisle. What is the best option here?
Well, it feels like to me the obvious solution, though you're right, those are two very mutually exclusive positions. But the one thing that gets them into alignment is if the Republicans were to agree to extend the debt ceiling to the end of the fiscal year, which is September 30th, and then we could wrap the debt ceiling talks in with the budget. And in that sense, the administration gets what it wants. Any budget discussion is in the context of the annual budget process rather than the debt ceiling, and the Republicans still have the ability at least to try to get some sort of fiscal reform in place.
Look, the reality is, and as you've just said, the possibility of a default very minimal, but we've seen 11-hour deals occurring. In the interim, there is collateral damage. We saw what happened with the credit rating in 2011. Do you believe we're sitting in that kind of fragile situation if we get too close to it and we don't see an extension at the very least?
Certainly, if we get right down to the last minute and it doesn't look like there's going to be a deal, I think that people certainly in the financial markets are going to get very nervous. I mean, right now, most of the response that we're seeing is kind of technical in nature. People are trying to avoid the bills that mature in that hot zone, if you will. But it's kind of a zero-sum game, right? Some bills are less desired and others are more desired. It's not really, at this point, rising to the effect of having an impact on the economy. But if we get right to the last minute and it looks like we're still far from a deal, then I think people are going to get a little bit nervous.
Just on the interest rate front, look, we've had an interest rate increase last week. You're of the view that this could possibly be the last of the rate hikes. Take me through what you believe to be the inflationary outlook. We've got numbers coming out this week, and then whether the Fed has done enough.
Yeah, so I think we're close to the end. I wouldn't be surprised to see one more move, perhaps in June, but certainly we're quite close. But unfortunately, I think inflation is going to be slow to recede. I think we'll get a reminder of that this week. We'll get another pretty firm set of inflation data again. And right now, the financial markets are pricing easing very soon, within the next 3 or 4 months, and significant easing between now and the end of the year. And I just don't see that happening, in the absence of a really bad economic scenario, perhaps, something related to the debt ceiling, or more likely if we were to see some really serious fallout from the tightening in credit conditions that's followed the banking turmoil over the last couple of months. Perhaps worst case economic scenario would bring the Fed to swing in the other direction. But I think, most likely the Fed is going to be on hold well into next year once they reach their peak.
Right, Stephen Stanley, thank you so much for joining us.